All right, everybody. Welcome back to the Beat the Odds of Business and Wealth podcast. And today we're here again with Josh Spurrell, who is in lovely Vancouver. Say hi to everybody, Josh.
Trevor, excited to be on the podcast today. We got an important topic to talk about today. Not the most comfortable of topics, but one of the most important for sure.
Okay. So topic for today, the screen said, beat the odds number 65, how to fight the CRA. All right. So what triggered this topic of discussion anyways?
I mean, we looked at one of our prior episodes, and it had the process of the guy getting his principal residence deduction basically negated, and the process that we're following is actually like very, very important, right? And so people look one time, it's like, okay, they have an assessment in the mail, and they think that's the end of the process. It's neither the beginning of the process or even the end of the process. Okay. And so people have to understand how to navigate through the system, because if they do navigate through the system, you can get a better result than you would if you didn't follow the proper steps and kind of know how to stick out and go through these situations.
Well, I mean, the thing about the CRA when they're trying to navigate these things is they don't make it easy. It's not very straightforward for people to even follow a path. There's no clear direction unless they have some professional help, either a lawyer, a tax lawyer, or a CPA, or a combination thereof. So I guess what is step one?
Step one is what you want to do is you want to hire a professional and contractually give them the freedom to take risks. And this is going to be a hard one for people, because I've heard people say, it's like, well, I hired the CPA and they agreed to pay my any interest and penalties that I have on any tax issues. And I say, and some of them even, they're going to pay the tax owing. And I say, hang on. It's like, you think that's a good deal, but that's a terrible deal, because that person is going to be financially motivated to take zero risk for you and make the most conservative filings possible. Basically give CRA everything they want up front, right away, no questions asked. I mean, that is their financial motivation. They have no skin in the game upside. What you want is to contractually give someone the freedom that they would file your returns and proceed through your tax issues as if it was their own issue. They would take prudent risks the way they would with their own money. But if you want an insurance policy, it's not it, because pretend I'm fighting a $100,000 tax issue. Okay, I'm fighting a $100,000 tax issue, but I'm only charging the person $10,000 a year. Like, what's my motivation? What's the professional's motivation? Like, they'd have to charge you $50,000 for that to be financially motivated, because there's a risk of losing. And so that is the first step, is you want to hire a trusted professional and give them the freedom to take prudent risks. And that's going to be something that's going to turn off 90% of the population, because they want guarantees in life, but there are no guarantees in life other than death and taxes. So
okay,
we can reduce them if you're willing to take some risks.
So how do you vet somebody like that? How do you know you're asking the right questions of a professional that you want to hire? Because you can pick any CPA out of Google there, and or your tax lawyer, and how do you know? How do you know they're going to take those risks on your behalf? Like, how do you vet them to find out if this is the right choice?
I would say that's a good question, because I say one of the warning signs is if you have someone who it's always black or white, it's always left or right. They can't even articulate the competing opinion. Okay. Now, some issues are just like very straightforward. It's like, it has to be done this way. But if every issue you encounter, every subject you encounter, there is one right way and no other way, and you can't see them even actively thinking through the different scenarios, and they can't tell you, if you do this, this will happen. If you do that, that'll happen. That person probably just doesn't have enough of an understanding. And a lot of times they've just been working in a firm where, contractually they were basically on the hook for interest and penalties, and so they just didn't take any risk. They didn't stick handle through any issues at all, because that was the financial motivation. The motivation was just to process the most conservative returns possibly, as efficiently as possibly, and let the taxpayer pay whatever the government says.
Yeah, I guess that's where experience in, just being a CPA, experience in working with, multiple businesses, and then being able to critically think. I think that is one trend that is, maybe unpopular, but we need people who are critical thinkers and who can come up with solutions that may not fit, the exact mold, whether it be a black or white thing, but see, what is the gray, what would be acceptable, and what would you speak to on that part of things?
Yeah, I mean that's kind of I guess it's basically a product for our Rockefeller school system. There's four multiple choice answers and one is right and the rest are wrong. And in the real world, it's very rarely that black or white. It's like there are good, better, best, right? And there's usually risks in all of them. And so it's just really important that you're working with someone who you can see that they're thinking through different options in their head. They're thinking through different parameters, and they're actually considering the client in that, because what's right for one client might not be right for another client. The level of risk that's right for one might not be right for another. So it's important to do that. And then once the customer, once the taxpayer has hired someone and give them some freedom to take some risk, and it has to be done contractually. It has to be done contractually. Our engagement letters are very clear that we're not responsible for interest or penalties, because if I was, the fees would be dramatically higher. I would want some of the upside. Mm-hmm. So and I don't think that's ultimately the taxpayer would win on that, because most of their tax savings would be eroded away to the fees that they're paying to the professional, and so I don't think that's the way to proceed. So,
yeah, and on that, because there are things that are out of your control as the professional. If you don't have a contractual obligation in there and that protects you as the accountant, you can give them advice and you can say, this is what we're going to be doing going forward. But they can go totally on another vein altogether and completely reject your advice, and then you're kind of on the hook trying to clean up the mess afterwards. I'm sure you've probably seen that before.
Yeah, and some of it's not. It can be as simple as we want a vehicle log. We want a mileage log for the fleet that they're using, and they don't have a mileage log, right? And it's they're busy, and they're working on a whole bunch of strategic objectives. They didn't get it for their fleet that year, and all of a sudden now they're in a vehicle audit situation and they don't have one. Okay, and so what would some professionals do in that case? It's like, just tell them, deal with it yourself, right? Deal with yourself, where if the person is kind of on your side, both contractually and the relationship, they're going to do their best to respond to that query, even though it's not under ideal circumstances, because you haven't guaranteed a win, so to speak.
All right. So what would be the next step to fight the CRA, to beat them?
The next step is you have to be ridiculously patient. You have to be ridiculously patient and build liquidity. Okay. If you want certainty, pay them whatever they want as soon as they ask for it. If you want certainty in your life, that's file the most conservative filings possible. Pay them whatever they want as soon as they want it. Okay. But if you want to fight, be prepared for a long process and be prepared for uncertainty. Okay, it's the nature of the game. If you have $100,000 tax issue, rather than just turn the other cheek and give up on the issue and pay, we'll go build $100,000 of liquidity and then try to win. That's the way I look at it, because some people think that there's an easy path, that all of a sudden that if you hire a CPA or a tax lawyer, that somehow they have a direct line to Mark Carney's office and we can get an objection looked at right away. It's like, we file formal objections, that thing's 12 to 18 months before that thing's getting looked at.
Yeah,
and that's just the reality of the situation. The 75,000, most of whom are working from home CRA employees. It's like they work on their own schedule. And like I said, if you want certainty, pay them whatever. Proceed in the most conservative way possible and pay them whatever they want as soon as they want. Do I think that's a good business risk? No, I think it's a terrible, risk reward. It's like risk is one of the only certainties in life, and certainty is mostly just an illusion at the end of the day. So.
Yeah, absolutely. I've worked in this office with you for 7 going on 8 years, and, heard a lot of different stories. Some of them quite frightening and terrifying, with people who have like over $1 million owing to the CRA. And it's like, oh my God, how do they sleep at night? And how do they get around that? When speaking with CRA, like, a lot of times these judgments that come across, just from my experience of working in the office, it's just some arbitrary person or peon at the CRA that gets something stuck in their craw, and they decide to go after someone. So I think that I think it's the obligation of the client to actually fight that, because sometimes there's not a lot of substance on that. So maybe you can speak to that a bit.
Yeah, I mean, the first start is like, when you're proceeding through this, you really need to understand the significance of, you need to understand classifications and ratios. Okay, so you need to understand like what we're classifying something as, and what is that ratio. Okay, am I deducting $100 donation receipt, or am I deducting with $100,000 of income? Or am I deducting a $50,000 donation receipt with $100,000 of income? You should be prepared for the level of pushback based on classifications and ratios. And you should know that going in. Like, we just recently inherited a client, and we find out that he's actually already under audit when he comes to us. And he's already under audit because he was he's a mortgage broker. And I want to say he had, I'm going to go with he had $500,000 in revenue. He had $500,000 in revenue and $80,000 in advertising expense. As soon as I saw that, I was like, well, yeah, of course he got audited. Like, that was, who filed it? I mean, my initial reaction was like, that was a stupid filing, because like what was in that advertising account, and what could it have been classified otherwise? Okay. Because there's a huge amount of discretion in a lot of the classifications that are chosen. But the pushback from CRA is going to vary dramatically based on that. And it turns out there's administrative contractors in his advertising expense that would have been fine and somewhere else, but they're going to become problematic now because of how they are originally classified. And no one probably told him that ratio was $60,000 on marketing on a mortgage broker is likely to get some attention, has a potential to get some attention. And, how strong are we in this area? So people need to understand those classifications and ratios. And then they also need to understand, what you said is like, it's your duty to push back. But they should also understand, before they push back, they need to understand the significance of the item and the other weaknesses in the filing. Okay. So maybe CRA is getting something completely and utterly wrong. Maybe they're not going to allow your amortization on a vehicle because of, some registration issue or something like that, and we got to submit it. But meanwhile, there's other weaknesses in the file. Maybe you don't have that vehicle logged, right? And, we start to look at, is this a $1,000 issue where we should just pay? Or is this a $10,000 issue? Okay, it's a $10,000 issue, but we have $50,000 of other weaknesses in the file. Okay, so they need to understand the significance of the issue, because if you want to hire a professional who's actually going to fight for you, they don't want to fight for you for $200 issues. Like, that's not how the relationship is going to work, right? It has to be a risk reward. It's like someone who would, if CRA comes and arbitrarily files something for me that's $200, I'm just going to pay it. I'm not even going to look at it. I'm not even going to look at the reason. I'm just going to tell somebody in the office to pay it. I don't even want to know about it. In fact, our administrative policy in the office for years is like, if there's anything less than $100 for a client, we just pay it. We don't even tell them, because it's not even worth the email correspondence back and forth. If it's less than one fund coupon, like, we're out on that. Just pay it and be done with it. And so you have to understand the significance of the item and the other weaknesses that you have before you fight. Because on one hand, it is your duty to fight, but on the other hand, it's your duty to maximize wealth for you and your household, right? For you and your family. We always talk about not everyone's getting on the life raft, and so it's separating the moral indignation between what we can win and what we're risking by fighting.
Right. Yeah. No, that makes a lot of sense. And you've been in business for how long now? 12 years? Is that right?
Yeah, 14 years now.
14.
So we have our 14th year anniversary here in August, and yeah, we keep plugging along, right? So the craziness that you see is it keeps going, right? And some
Yeah.
people think that their issue is all that crazy, but I mean, you've spoken to issues where
Hmm.
people come to us owing millions of dollars, right? And so when someone has a small tax issue, it's actually kind of kind of small, right?
Yeah.
It's
Yeah.
like that strange rash that you go see, tell your doctor. It's like the doctor really didn't think anything of it. Everyone else would think something of it, but the doctor didn't think anything of it. At this point, I don't think there's much that could surprise us with the tax filings and rulings and CRA's opinion and the way they proceed through things. So.
Yeah, and the reason I brought that up was because like you guys have like a wealth of experience, not just yourself, but like there are people here in the office who have worked here for a long time. So they've seen a lot of different things and a lot of different fights with the CRA. Now it's not like every day there's a new fight with the CRA, but having the experience and the depth of the team and of the staff here, that really makes a big difference when it comes to getting results for clients and also making those smart decisions like, is this worth fighting or do we just pay the bill, right? So what is the next thing that people should keep in mind when they're wanting to fight the CRA on something?
I think the next thing you have to understand when you're responding, it's very critical to limit the scope of what you're responding to, because it's not just a carte blanche issue. If they're auditing you on a specific issue, the information that they're requesting and the information that you're submitting should relate directly to that issue. You shouldn't, voluntarily increase the scope of the issue being challenged by CRA. And so that's the point. And sometimes you have to push back on what actually they're asking for. So sometimes it's the discretion of like, you should give them what's necessary to rule on that issue, but no more. So what's actually included in an information response, it shouldn't necessarily just be everything that you can, or even exactly what they ask for. Sometimes you should give them less than what they ask for because they're asking for things that don't actually directly relate to the issue. And it could, unknowingly increase the scope of the problem. Okay. So I think you should be careful on what information that gets submitted. And then once that's, because they ask for inquiries and you can get rulings. So you can get assessments, and people don't often understand the difference between an adjustment request and an objection. Okay. So an adjustment request is like, I'm going to give this to CRA either because I've changed my mind on a filing, or I want you to relook at an assessment that you made because I don't think it was the right one. And so basically you hand this adjustment to CRA and it's basically saying, pretty please, will you look at this and see, can we change it to the way I want it? That's what an adjustment is. Like, CRA doesn't really have a legal obligation to look at an adjustment request. Okay? What they have a legal obligation to look at is a formal objection. And a formal objection has very stringent timelines, and it has a very stringent format that it has to be submitted. Okay, so it has to be submitted to the Chief of Appeals, and it has to be done generally within 90 days of the assessment. Okay, with personal tax assessments, sometimes you can go to the filing deadline of the next year. So sometimes you almost get a year on personal tax issues, but that's just personal tax, and most people miss their opportunity to object just because of time. Like, just in mass confusion, they don't know what to do. They don't understand. It's like, you got to get off the fence. We're going to object, and we're not going to object. And some of it goes back to, what's the significance of the issue, and what other weaknesses do we have in the file, and how pervasive this will be. Like, is this an issue that's going to come up every single year for this business? Okay, so maybe it is only a $20,000 issue, but it's a $20,000 issue every single year forever. Okay. That might be, now's the time to dig your heels in, because we're going to have this issue forever. And so you really have to understand, that you have very precise objection deadlines. And it's kind of hard to get a professional in place once you have a bad assessment, because that timeline is so, like, it's supposed to be 90 days from the date on the assessment, but usually practically speaking, by the time you get that assessment in the mail, usually you've lost a week or two already. And now you're going to have to find a new representation, get time to book into their initial consult, get them up to speed, and then have them make a good decision, right? Like a lot of the good decisions are made because we already understand the client. We've been working with the client for a year, 2 years, 3 years 10 years before they get this issue. And we kind of understand their business, very well at this point, and we understand their risk tolerances and their objectives that they have. And so knowing the difference between those objections and those adjustment requests and assessments, because they're not the same and they're so vastly different. The adjustment is basically pretty please, will you look at this? Pretty please, CRA. And the objection is like, you now have a legal obligation to look at it. Now, the advantages of them are the adjustments will process far quicker. So people would say, well, why don't you just always go to an objection? Because it'll process far quicker. And a lot of times you'll get someone less senior. And so in a way, you can almost get it looked at twice. Like there's really nothing wrong with submitting both if you're under the time parameters. So if you're under the time parameters, you can submit an adjustment request and you can submit an objection. And we know those objections, sometimes they're, let's call it 6 to 18 months before they're going to get looked at. But you might simultaneously also submit an adjustment request, and maybe that's done in 3 to 6 months. And so the issue is then taken care of. You could just withdraw your objection. Okay, and it's almost like getting 2 shots at the target, basically. And so people should understand that, right? But I think a lot of people don't want to do it because they just get nervous about the process. Like it's just humans tend to have this like huge quest for certainty in their lives. And, if you really want to push the CRA, you have to venture into uncertain territory. And, psychologically, some people aren't all that cut out for that, but that's usually the difference between building the wealth or not building wealth, is taking some risks.
Okay. Well, let's talk about that uncertainty, because when you're, submitting either the request or filing the complaint, like, there's a time period there. You said, 6 to 18 months. Like, what do people do in the meantime? Like, what is your accountant supposed to do? What are you supposed to do when you're waiting for this judgment or waiting for an appeal? Like, what do you do in that time, that messy middle when you're waiting to hear back? Like, because if you have like things that are accruing over that, 6, 12, 18 months, that can get a little bit panicky. Like what is the plan of your team, and what should a business owner or a person who is, waiting for a judgment or waiting for a response from CRA do in that middle time while they're waiting?
I mean, A is like maybe the most fundamental, and this might sound kind of simple, but they have to keep their foot on the gas pedal. Because especially if you're a business owner, you're always taking a risk every single day. And the statement is like, if you're not growing, you're dying. And that would be someone who has a tax issue. That one would be someone who has some sort of legal issue. That one would be someone who's potentially going through a divorce. That one would be someone who has a risk from a competitor or a risk from obsolescence. It's like, man, you got to keep your foot on the gas pedal. And so you have to allocate the proper amount of time to actually growing your income earning power and growing your wealth. And you may maybe minimize the amount of time lamenting on this other issue, because once you pick a course of action and get the required information together, it's just a waiting game. And over analyzing it really isn't going to increase or decrease your risks of successful resolutions. So keep your foot on the gas is probably number one. And number two, then it's liquidity. People get into so much problems, not because of the level of risk that they take in taxes, because they just have no liquidity at all. And that creeps up not just in tax issues and business risk issues, missed opportunities where, heck, you can be worth $2 or $3 million, but if it's all illiquid assets, $100,000 tax issue can become insurmountable. Okay, so building liquidity is probably the second one. And then you have to realize it's like, if you're not successful in this, the ability to get payment terms is better than people think. It's better than people think, because people have dealt with the CRA collections department, but they're essentially a lot of bark and very little bite. Okay, and so when you're dealing with them, they sound very big and scary. But there are ways to, if you do have a debt. I'm not saying you avoid the debt in perpetuity, and although sometimes that becomes the answer. It's like, how do we try to avoid any personal obligation of this debt at all? But there are ways to extend the payment terms. Okay, so you maybe have a $100,000 tax issue, and maybe you're following the steps and you're building liquidity, but you can only build $50,000 for liquidity. Then what happens to the other $50,000 at the end? It's like, well, you got to have a professional who's going to be with you at that point too, to make a payment arrangement, because it's easier for the professional to make a payment arrangement than the taxpayer, because the debt collection department, they play on people's emotions. It's their training, right? Mm-hmm. You can even see when they have a representative, they try to avoid the representative at all costs, because as soon as you call the representative, it's like, now it's two people on the phone, neither of their money, and now it becomes a more factual conversation, right? Especially when they know they're talking to someone who knows how to, game their, kind of gamify their collection efforts too. So, it tends to be a more reasonable conversation, right? And so, you have to realize that there's going to be uncertainty in that. There's going to be uncertainty in any sort of investing, business, tax issue. It's like, what you're trying to do is you're trying to take prudent risk, and you're trying to have an acceptable level of liquidity while you go through it. That way you can take those risks. You can take those risks, right? Because it's not like you're taking bad risks where you have a 1% chance of success. It's like, you got to take risks where you're going to win more often than not. But if you have no liquidity, you're just going to act scared all the time.
Yeah, and I think that brings up a really good topic when it comes to Spurrell and Associates, because the mission is to help businesses beat the odds. And you go to your average accountant or CPA, and they're there to help you with tax issues, your filings and whatnot. But when it comes to Spurrell and Associates, like, you actually work towards helping them come up with ways to increase their liquidity, things such as marketing, systems, profitability, how to price in your margin into your jobs, like ways to actually increase that liquidity, where other places, like, you're on your own. Basically, like, here's the problem, here's the issue, go make some more money, but we're not going to give you strategies on how to do that. So, maybe speak to that a little bit as to, why you decided to do that, and how that has really, transformed your customers' lives and outcomes, and as well as your firm.
Yeah, I mean, the number one reason why you're going to lose a client is because they're not having financial success. That's like the number one reason, right? And so, if your goal is to just file tax returns, you don't actually increase their probability of success at all. And so, if you want to build client retention, it's like, our goal is actually, almost force them to have financial success, almost to be the resistance against, decisions that are unlikely to cause financial success. And it essentially just creates a win-win, right? And then it creates an atmosphere where we're willing to push back, and we're willing to take risks, because we know we're taking these 10 risks this year. Only one of them is a tax risk. The other 9 are other things that we're doing. And we know we've been successful, this many times out of 10 in the past. It's like, we should keep doing that. We should keep pushing the envelopes, right? And so it's important, getting back to these, like, tax issues. Like, it's really no problem to file the adjustment and the objection simultaneously. But essentially, the big one is, and we don't always do that, because sometimes we know the adjustment's not going to have any success at all. But not missing that objection deadline, and then it's kind of more important. You have to understand in the process, like, when you're going to get challenged on a tax issue, you're going to get an information request, and we call it an audit, but it's like an information request, and they're going to, ask for this information, and then they're going to make an assessment. Okay, you have to understand that the person who's reaching out in that part of the process, their key performance indicators, they're usually assigned to certain types of transactions. And their key performance indicators is, how many people did you reach out to, and how much tax dollars did you collect back? Okay, so when you lose that first audit, that's not the end of the game. Okay. That's, in some respects, you're dealing with someone who's financially motivated, not really to apply the rules, but to rule against you. I'd like to say that doesn't happen, but let's be realistic. Of course, it's going to happen because that's probably their key performance indicators. Like, you're assigned to this audit task, and we're going to audit all the vehicle expenses for 1,000 companies in Canada. And we want to see how much you can collect back. Okay, that's your job. Okay, but then the next part of the process is when you file those adjustments or when you file those objections, you're dealing with people who are probably more likely motivated by how many objections, how many adjustments that they processed. Okay, so they don't necessarily want to get bogged down into some sort of long discussion about that adjustment that you're requesting. It might just give you the decision you were looking for all along. And then in terms of the objection, you're dealing with the department who is likely evaluated based on how many objections they process and how many of those objections eventually proceed to tax court and how many of those objections might get ruled unsuccessfully in tax court. So there's different parts of the process. And in one case, you think you lost when you got your original assessment, but that's probably the hardest one to win because you're dealing with someone who's basically motivated to rule against you. And later on in the process, you're motivated by people who are more likely to be motivated to process a number of transactions, how many transactions they're processing, and how many of those transactions that they process don't go off to tax court and get ruled against them. And so it's important to understand that. And so, like, if you do lose on the formal objection, okay, so now we've gone to the point where we had an information request that didn't go your way, and or you have an assessment that didn't go your way, and you filed an adjustment and you filed an objection and you stuck with the 6 to 12 months. And I should note that, like, when you get to the objection stage, the information stage is more geared towards just give them the information that they need to make this ruling. And at the objection stage, it's more, you're trying to be persuasive on the issue. Okay. So there should be more commentary on the objection. It's like, you're not just trying to submit information, you're trying to submit information and make a persuasive argument that the assessment was wrong in the first place. Okay. Not let them just simply look at information. Okay. But now if you've gone through that objection process and it didn't go your way, now you need to step back and you need to reevaluate the whole thing. It's like, if you did lose, you should consider other filings that maybe can be changed in your favor. So maybe something was ruled as, maybe something was ruled as an employment benefit and was ruled as salary. And, like, can I now go back and submit an adjustment request on that corporate tax filing to reduce that corporate tax bill? And so, yeah, I didn't get everything I wanted. It's worse that it's being ruled as employment income. But now my corporate tax obligation has gone down. Okay, so there might be offsetting changes that are going to reduce your obligation. And then you should also consider, is this really a non-issue? Because I'm simply able to resubmit this deduction in a subsequent year. I haven't actually lost this deduction. Think of something like an ITC where you have 3 years to do it. It's like, I haven't actually lost. I can really just submit this in a subsequent year. So I've really just changed the timing of the payments. Okay. And then last but not least, then it's tax court. And so after you get this objection ruling, now you have another 90 days to determine if you want to take the CRA to tax court. And again, you have to consider the significance of the whole thing, because the main goal is to get the foot on the gas pedal. So I always tell people, it's like, it's $10,000 to fight the CRA in tax court, at least minimum. So anything less than $10,000, you're not doing it at all. And then it just becomes more of a game theory argument where it's like, if you have a $50,000 issue and you think you have a 50% chance of winning, it's like, that's a $25,000 issue. So if the lawyer wants $20,000 to go through this process after your own time, that's still not worth it at all, right? But if there's a $100,000 issue and you think you got a 90% chance of winning, like, yeah, you should go for it. It's just going to cost $10,000 to litigate, right? And so it's important to understand that it's like, how significant was this loss? Is there other filings that now can be amended or changed or adjustment requests submitted that will offset some of that loss? Have I completely lost everything in this, or is there ability to, submit these deductions in other forms, whether it's, if I didn't get this on the corporate side, can I get this on the personal side? Okay. And then, can I just do it in another time period whatsoever? And it's like, if those aren't acceptable, if we're still looking at a loss and we think that CRA has applied it inappropriately, then we can look at tax court. And so it's really important for people to understand that whole process where there's an assessment. Sometimes there's an information request that predates an assessment that you didn't want, an assessment that's not going your way. Sometimes not. Sometimes it's just an assessment. Okay, and then you're on the clock. Okay, so now when you have this assessment, okay, then you can think about, okay, do I submit an adjustment request or do I submit a formal objection? Okay, and then once I get that formal objection, it's like, now can I make a persuasive argument to sway them in my favor? Maybe I can't get a complete win. Maybe I can't get 100% of what I'm looking for, but maybe I can get 80%. That's good enough at the end of the day, because I was facing maybe it's no longer $100,000 on, maybe it's $10,000 on. It's like, that's a win. That's a win, right? You just saved 90 grand on that process. And if not, if you have lost that objection process, is there any other ways to recoup that loss? And if not, is taxpayer court actually prudent? And it's just, I tell people, it's like, take the emotion out of it. The goal is to increase your net worth for your family. It's like, your goal is not to be the martyr in tax court fighting paying a $10,000 lawyer bill to fight a $2,000 issue.
Right. So basically there are a lot of different ways that people can go about, changing the outcome, but you have to have somebody who's got the knowledge, the experience, the depth and background to actually help you with this problem, right? So, is there anything else that we're lacking or anything else that we missed talking about when it comes to fighting the CRA?
Yeah, I think that's the main one, Trevor. It's just like, you have to, make sure you understand assessments. When you get assessments, you're now on the clock. And sometimes before that assessment, you're going to get an information request. Make sure you're giving them the required information, but no more than the required information. And if you get that negative assessment, make sure you understand your deadlines to formally object. It has to go through the formal objection process, and or submit an adjustment, because sometimes we can submit an adjustment after the deadlines have passed. And in fact, sometimes we can get a formal objection after the deadlines have passed for extenuating circumstances. And then once you get to that objection stage, make sure you're resubmitting all the relevant information and making a persuasive argument of why this should be ruled in your favor, and realize that now you're dealing with someone who's more motivated to apply the tax laws as is, and less motivated on just how much did you claw back from all these poor taxpayers from this mass audit program that you went through. And then after that, if it doesn't go in your favor, are there other mechanisms, are there other filings, other current filings or other subsequent filings that can be changed to mitigate some of these losses? And if not, what's the likelihood of success in tax court? What's the cost to litigate? And should you go all the way to appeal in tax court?
All right. Well, thank you so much, Josh, for sharing all of that information with the viewers. There's a lot to unpack there, so you might have to watch this video over and over again. But at the end of the day, you need representation that will fight for you and go to bat for you, and that is Spurrell and Associates for sure. Don't forget to do not miss out on our Beat the Odds at Business and Wealth bootcamp that's coming up in November. Go to the website, spurrell.ca, spurrell.ca, and get your tickets today. Is there any parting words, Josh?
No, hope to see people at the bootcamp, because that's our primary source. We get a lot of requests from potential clients. We're not able to field them all right away. We do our best to try to get them consults, but we prioritize every single person who comes to the bootcamp. If they want a consult, they get one, because that's that's our priorities. People who already understand our path and our vision, and get them in that top 20% or top 20%, top 1% of net worth. We lay out the path for them in the boot camp, and so we love to see people there.
All right, thanks so much. All right, guys, that's it for this time. We'll catch you on the next video. Next week, Josh should be in the office, and we'll be able to have another great discussion that's going to help you increase your wealth. We'll see you next time.